E-commerce is poised to grow rapidly in Southeast Asia and China. With e-commerce sales poised to climb rapidly in Southeast Asia and China, finding good e-commerce stocks to buy in those regions is worthwhile. Coupang. Coupang has entered the Southeast Asian country of Taiwan, whose e-commerce sector is poised to grow rapidly. Sea's Southeast Asian e-commerce platform delivered excellent fourth-quarter results. JD.com, one of China's leading e-commerce platforms, JD reported strong fourth-quarter results and is well-positioned to grow rapidly going forward. Let's dive in. Here are the 3 e-commerce stocks to buy for a post-pandemic world. Welcome to Timely Investment Research. In Southeast Asia and China, e-commerce is poised to grow meaningfully going forward, and e-commerce should continue to expand in those regions for the foreseeable future. In a December 2022 report, McKinsey, a very well-respected consulting firm, wrote that e-commerce in most parts of Southeast Asia had reached a positive turning point. Specifically, consumers' use of e-commerce platforms in the region boomed from 2016 to 2021. In the wake of the pandemic, e-commerce's growth in the region is slowing, but the firm contended that Southeast Asian e-commerce markets could sustain robust annual growth of between 15 and 25% for the next 5 years. As a result, finding Southeast Asian e-commerce stocks to buy seems like an excellent strategy for long-term investors. Meanwhile, in China, the government's stimulus measures are expected to start significantly, positively impacting the economy and consumer spending in the second half of this year, making the stocks of strong Chinese e-commerce companies attractive at this point. These 3 strong e-commerce stocks to buy have significant exposure to the Southeast Asian e-commerce market or the Chinese e-commerce market. Number 1. Coupang. Coupang is based in the East Asian country of South Korea and still generates most of its revenue from that country. However, Coupang in recent years has expanded to the East Asian country of Taiwan, and that country's e-commerce sector is poised to grow very rapidly going forward. According to one estimate, Taiwan's e-commerce sector will grow at a compound annual rate of nearly 10% over the next 5 years. Moreover, e-commerce is expected to account for 11.6% of retailers' total sales in 2026 in Taiwan, up from 9.5% in 2022. Meanwhile, Coupang's overall fourth-quarter results were very strong, as its gross profits soared 59% year-over-year, and its gross margin jumped 8 percentage points year-over-year to an impressive 24%. On the bottom line, its net income climbed $507 million year-over-year to $102 million, and its free cash flow came in at a very impressive $462 million. The e-commerce company's trailing price-sales ratio is a very low and attractive 1.2 times. Number 2. Sealed. Singapore-based Sea owns Shopee, a Southeast Asian e-commerce platform. Unsurprisingly, given the very positive e-commerce trends in the region, Shopee delivered strong financial results for Sea last quarter. Specifically, the unit's gross merchandise value climbed 7% year-over-year, while its earnings before interest, taxes, depreciation, and amortization, excluding certain items, came in at $258 million. Sea's overall gross profit soared 33% year-over-year. In addition to growing its gross merchandise's value, Shopee sharply cut its costs and monetized more of its platform. Sea expects Shopee to be boosted over the longer term by the economic growth of its Southeast Asian markets as well as the increased penetration of e-commerce in those markets. In the wake of the company's fourth-quarter results, Bank of America increased its price target on Sea stock to $92 from $68. The firm expects the company to continue to be profitable going forward, and it views Sea's comments about itself as upbeat. However, after Sea stock rallied sharply in the wake of the results, the bank kept a neutral rating on the shares. Number 3. JD.com. JD.com, a large Chinese e-commerce player, sought to target China's second-tier cities that are less populated than the country's largest municipalities. Additionally, it invested heavily in its logistics network, cutting its expenses and enabling it to earn revenue from other firms that pay it to use the network. These initiatives have borne fruit for JD, as its 2022 free cash flow came in at an impressive 35.6 billion Chinese yuan, or $5.2 billion, up from 26.2 billion Chinese yuan in 2021. Japanese bank Mizuho expects JD's revenue growth to accelerate to double-digit percentage levels in the year's second half. The firm trimmed its price target on JD stock to $80 from $85, but kept a buy rating on the shares. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.